please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Sell off a little bit as we speak. So 9,842, it was looking like a pretty bullish day. It still is good with 50 points, but we're off, definitely off the highs now. So, Meera, good afternoon.
Hi, Prashant. Good afternoon. So let's get started then. And first up, our top stories. Market off the day is high after a firm start. Frontline indices gain 0.5% each. The mid-cap index underperforms marginally.
Good sales numbers in the month of September drive auto stocks higher. Tata Motors surges over 3% after it sees strong growth in the commercial vehicle segment. Bajaj Auto also gains on the back of good sales in the month of September.
CNBC TV18 news break confirmed Reliance Communications calls off its proposed merger with Aircel, but says the deal for the tower business sale to Brookfield is still intact. The stock tanks over 9%.
It's a good listing for another insurance player. State Bank of India, Life Insurance, SBI Life Insurance. The stock lists at a 5% premium to the issue price of 700 rupees. Its peer ICICI Prudential also sees a strong day today.
Base metals like zinc surged to the highest levels in 10 years, led to trades at 10-month highs on supply concerns as 60% of lead and zinc mines in the Sichuan region in China face shutdown.
Okay, those are the top stories. We'll get you more in a bit, but let's bring in Ashwani Gujral, who's with us as always on the top of 1:30. Ashwani, thanks very much. Good to have you here. I mean, you were pointing out to the fact that the Nifty Bank wasn't participating the last we chatted at 11:30. And I think we're seeing the consequences. I mean, 25 points odd shaved off from the Nifty. What do you make of things?
See, let's be clear that the market restarted the rally and was not able to cross the 50% zone or a significant high, which is 99.20 on the upside. That level having failed, now you should head back towards 9,700 and possibly break it. The Bank Nifty is, pricing in more NPAs, probably no rate cut. So I think the downside will be led by financials. Even now, it's a good time to get short on the Bank Nifty, and maybe by end of the day, because people going into this day went in bullish. So everybody who bought in the morning is now kind of in trouble. So that trouble will only accentuate as we go into the close. So we can be sure now that 99.20 is the immediate top, which has been formed today. As far as individual stocks are concerned, Adani Enterprises is a sell with a stop of 114, target of 105. HCC is a sell with a stop of 35, target of 29. And Idea is a sell with a stop of 80, target of 68.
Okay, fair enough. I mean, the Nifty and the Bank Nifty also, I mean, Nifty Bank, for example, that is also looking in trouble, Ashwani?
See, obviously, on a day like this, it's lost all its gains in like the first 5-10 minutes. So that's where the trouble is likely, because if NPAs, etc., are going to increase, chances are, Bank Nifty will lose a lot of its gains, which priced in resolution, etc. So out there, possibly post 23, 700, 800, I think over a period of time, you'll get to 22,500, 22,700 if this downtrend continues, because this will also be a prolonged kind of downtrend where, people are now looking at Brazil, etc., and, kind of ignoring our market. So 93 to 9,500, that possibility today has opened up with this lower high.
All right, Ashwani, thanks very much for your afternoon trades. Time for some more market opinion. We caught up with Madhav Dhar, the managing partner at GTI Capital Groups earlier this morning to speak about the fundamentals of the market. So here's a quick slice of that conversation.
Markets are extended worldwide and certainly in India. And from a valuation standpoint, you're, take your pick, high or very high. And there is flagging economic momentum. So it's obviously a bad combination of high altitude and air thinning is never a good combination. The economic recovery has taken longer for a variety of reasons. So it is yet to come through, and markets are forward-looking animals, so all is well. I think that's the bull case for it. I am much more ambivalent. At the risk of sounding I'm sort of neither bullish nor bearish, I'm a little sheepish, because I don't really feel like selling, I don't feel like buying, because I buy the bullish argument, but there's very little evidence that some of the preconditions that are required to get things going are really being addressed with the urgency that they need. And the markets need it because you're already levitating, beyond your valuation comfort zone.
SBI Life Insurance had a good debut on the exchanges this morning. The stock listed at a 5% premium to its issue price of 700. We caught up with Arijit Basu, the MD and CEO, to talk about the overall business growth as well as a lot more. Hear him out.
The OPEX ratio of SBI Life is something which has been steadily improving for us. And that is based on two things, the distribution efficiency that we have in both our channels. We have the agency channel where our agent productivity is significantly higher than that of our peers. And in the bank assurance also, the number of people that SBI Life puts in to service the SBI branches is significantly lower. So as a combination of both the things and the fact that we are having a very high revenue growth in the last few years, this is leading to the cost ratios coming down. The agency channel is growing at a rate of 20%, which is double that of the industry growth rate for the agency channel. So our agency channel is growing at double the industry growth rate. Our bank assurance is also growing at double the industry growth rate. Bank assurance is growing at 40%, whereas bank assurance in industry is growing at around 20%. So it is both the channels which are growing much higher than industry, and which is giving us the good results that we are seeing at the moment.
Okay, the market, by the way, has come off even more. We started the show at 1:30 with about a 55-odd point gain, and that itself was about 20-25 points off the high. In the last 10-15 minutes, the market's dropped another 10 points or so. I mean, in terms of just pressure points, Larsen, SBI, ICICI, Kotak, HDFC Bank, Aisha, a lot of banks there. Just sheer index weight counts, and that's where the pressure really is coming from. It was visible in the first half in the form of the Nifty Bank not participating, while the Nifty was doing just fine. Let's address the flashes which are coming up at the bottom of the screen, and this is the much talked about, much awaited Shriram-IDFC merger deal. Remember, we had both parties signing an exclusivity period during which they decided to talk to each other and firm up contours of the deal. That exclusivity period, by the way, ends in the next couple of days. But we are picking up that they might not still have worked out the final structure. Ritu is getting us the story. She is joining us in the studios. Ritu, go on.
Well, there's been a lot of pressure from the shareholders and fears of dilution from both the sides, which is why the earlier structure, we understand, was abandoned by both IDFC and the Shriram Group. And they're working on a new deal structure for which, remember, as you mentioned, 8th of October is actually the deadline for the exclusivity talks between the two parties, which is about to come in the next few days. But given the fact that no clear structure has emerged at this point of time for both of them to take forward, and they're still toying with various options, it is likely, in fact, it is very certain at this point that the deadline for this exclusivity talk will be extended by at least 6 to 8 weeks. And now, what will the new structure look like? Some of the ideas that are being toyed around is one, that Shriram Transport will not be merged into IDFC Limited per se, but will remain an independent entity. Remember, earlier the plan was for Shriram Transport to delist and then become a subsidiary of IDFC Limited, whereas Shriram City Union merges with the bank. We also understand that Ajay Piramal may not hold more than 5% in IDFC Bank, which is something that was being speculated upon earlier, but it seems that the RBI also at this point, as we had reported earlier, is uncomfortable with Mr. Piramal alone holding more than 5%. So these are the two broad ideas that are being toyed around with, but of course the final structure, as I said, is yet to be finalized. The timeline for the talks and therefore will be extended, and we are likely to hear something from the companies before that 8th October deadline is reached.
All right, Ritu, thanks very much for all those details. With that, we bring you another CNBC TV18 exclusive. Sources say that after losing the bid to Tata Motors, M&M may now get another opportunity to bid for electric cars. Anshu Sharma now joins in with more on that. Hi Anshu, what more can you tell us about this?
That's right. We understand that as per the provision of the tender which was given by the ESL, there was a provision that L2 and L3 could participate and match the lowest bid which has been given by Tata Motors at 10.1.
Anshu, what more can you tell us about this?
That's right. We understand that as per the provision of the tender which was given by the ESL, there was a provision that L2 and L3 could participate and match the lowest bid which has been given by Tata Motors at 10.16 lakh. So ESL, which is the agency which has given out the tender for 10,000 electric vehicles, will have to now reach out to M&M to match the lowest bid given by Tata Motors, and it'll give about a week's time to Mahindra & Mahindra to match that lowest bid given by Tata Motors. So we'll have to now wait and watch whether Mahindra & Mahindra will be able to match the lowest bid given by Tata Motors. But we also understand from our sources in ESL that the difference between the Tata Motors bid at 10.16 lakh and M&M's bid is quite huge, around 2.5 lakh per unit. So we'll have to see whether M&M will be able to match that lowest price to win this bid for the electric vehicles. Back to you.
Anshu, thanks very much for that. So that's the important electric vehicle push as far as the government is concerned. Remember, by the way, the cars that Tata Motors is going to supply, or for example, for that matter, another player like M&M, which may win the bid portion of that contract, is to replace vehicles used by the government. I mean, this is just a drop in the ocean. The government, by estimates, has uses about 5 lakh vehicles. And right now we're talking about replacing 10,000 odd vehicles out of the total. 416, 417 for Tata Motors. Mahindra & Mahindra is up about 1.5%. The market seems to have picked up a little bit. We were down to being up just 45 points. Now make that 60, almost 60. 9,846 odd is where the Nifty spot is at right now. There are some flashes at the bottom of the screen. This is NHAI chairman saying that NHAI is likely to float more bids by the end of financial year 18, this financial year. Likely to float bids via 2 more tranches under the monetization drive. So that is the Highways Authority of India making those statements to raise money via LIC, EPFO and Masala bonds. We'll get you more details on that in a bit. The markets, as I said, are picking up once again. CNBC TV18's Nimesh Shah travelled to IIM Ahmedabad with the Motilal Oswal team, where they conducted the Think Equity, Think QGLP contest. QGLP being the Motilal Oswal motto of quality growth, longevity and price. Nimesh caught up with 3 market veterans, Ramdev Agarwal, Ramesh Damani and Utpal Seth. Here is a slice of that conversation.
Because of the very attractive valuation for the given earnings right now, whatever is the condition for that wonderful, this 10,000 kind of Nifty, that is providing a lot of comfort to issuers, whether it is a government, whether it is a new companies, whether it is foreigners. I think, I'm not saying that they are selling only because of the valuation, but valuation is definitely one of the reasons. Because in all the road shows we are doing in America and Europe and other parts of the world, we are getting this constant, throwback that we love India, we would like to be in India, but current valuations, they have a choice of going anywhere in the world. Okay. So clearly, we are getting a supply from FIs, we are getting supply from government, we are getting supply from new issuers, and the buoyancy is so high of DI flows to the mutual funds and the retail participation in the new issues and all, that so domestics are buying and everybody else is selling. So that, my sense is that it's a nice situation to be in. Okay. Economy is kind of at an equilibrium right now.
Okay. If, for example, we're going to move to electric vehicles, the entire complex after World War II built on oil refining, auto ancillaries is a threat. Insurance is a threat, infrastructure is a threat,
Well, to your mind, what could be the big disruptor over the next few years, which can hit a lot of the Indian companies?
See, I think there are multiple disruptions that are taking place across multiple sectors. What I would like to focus on is the fact that, Joseph Schumpeter said, theory of creative destruction. we are all focused on where is the next creation, we should be equally focused on where is the next destruction. And the terminal value gets compromised much earlier than earnings get compromised. So, you know, when Ramdevji was saying that it will still take 15 years and that's an opportunity, I'm sure he's right about that. But maybe the terminal value of those companies will get compromised much earlier. And the earnings will still continue.
I'll take this opportunity to ask one rapid fire question to all three of you all. Different questions. Ramesh, to you first. 11,000 on the Nifty first or 9,000 on the Nifty first?
Probably 9,000.
Okay. Ramdev, banking sector or non-banking sector right now to invest?
Banking sector.
Still banking sector. Utpal, to you, bigger risk coming from global markets or bigger risk coming from domestic markets, at least in the near term?
Domestic markets in the near term.